Good morning, everyone. Darius Dale here to present our macro minute for January 6, 2022. Starting with markets, we have stocks generally down, although the S&P 500 is flat this morning. Commodities mostly down, although WTI is up 1%. Crypto down, dollar down, global bond yields up. Big movers today, you have silver and Bitcoin both down about 2%. Nikkei 225 index closed down about 3%. Ethereum down about 6% now. On the economic front, we have more of the same with respect to global services PMIs for the month of December, signaling a weak handoff to start Q1. So accelerating, we had China ticked up to 53.1. That's the highest point we've seen in a couple of months. Unchanged, Brazil at 53.6. That was tied for the lowest since May of 2021. Decelerating, US and Japan. US it ticked down to 57.6. That's the lowest print we've seen in 3 months. Japan 52.1, lowest print we've seen in a couple of months. We also got some hawkish employment data out of the U.S. economy yesterday with respect to the ADP figures. They ticked up 807,000 month over month to 1.2 or 125.7 million private payrolls in December. That's the highest level we've seen since May of 21. That 807,000, that change is the fastest change we've seen since about March. So that's a big move higher in employment growth, and this is something we've been talking about as a theme really since going back to the middle of the summer, as the expiration of enhanced unemployment insurance very much had impact in terms of increasing the labor force and reducing reducing unemployment in the U.S. economy. With respect to today's probable range setups, I got an overbought signal in WTI, overbought signal U.S. dollar, Japanese yen, and then basically every bond yield, every yield in our global macro risk matrix, of which there are 42 financial market indicators that we're scoring through the lens of our volatility adjusted momentum signal process to effectively now cast the market regime. They're all overbought. I mean, they're clearly all up on a straight line here. So 10-year bond yield, 10-year JGB yield, 10-year Swiss yield, 10-year gilt yield, 10-year Treasury yield, 10-year or 2-year Treasury yield, 10-year Treasury yield, 30-year Treasury yield, and the 10-year tips break even, as well as the 10-year 10-year real tips yield. Sorry, not the 10-year real tips, not the 10-year tips break even. Oversold signal on Nasdaq and currency volatility. Looking at S&P 500, that's still bullish, fam. So 50 basis points of downside with 4% of upside. WTI still bearish, fam, still probing the upper boundary of its probable range with 14% of downside. Bloomberg Dollar Index that broke to neutral VAMs today, and it's right in the middle of its probable range at minus 0.8% downside versus 0.8% of upside. Taking it to the chart, so on this analysis, and we'll go into too much detail in this macro minute format, but the reality is we're showing skew on the x-axis and the y-axis. We're showing the volatility risk premia, and obviously the boxes indicate kind of what being in any one of these four quadrants mean from a risk management perspective. And the one thing there's two things I'll call out. One, pretty much every asset class, and the number in the parentheses is the number of ETFs in that sample on a median basis. Pretty much every asset class skews kind of in a very narrow distribution relative to its trailing 1-year trend, which means investors are very confused about the medium term outlook, kind of the next couple of months. But the one thing that is signaling right now is this US dollar, high skew, very high skew on a Z-score basis, high volatility risk premium. It's much indicating that a short squeeze in the dollar is probable here, and obviously that will sort of likely catalyze some risk off in crypto and commodity exposures as well. So be aware of that. A lot of investors are kind of filing into value here and now. Getting back to the probable range setups, 10-year Treasury yield minus 26 basis points of downside versus it's at the upper boundary of its probable range. And 10-year Treasury was bullish, fam. Sorry. Bitcoin and Ethereum still bearish, fams, minus 3% of downside for Bitcoin versus 16% of upside. Ethereum minus 1% of downside versus 20% of upside. And then lastly, gold broke down to neutral VAMs today as well, minus 1.4% of downside versus 2.4% of upside. So with that, Darius Dale presenting our macro minute for Thursday, January 6, 2022. If you like the analysis, come check us out at 42macro.com. Appreciate you.